Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday, the 10th of February. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, the British Prime Minister Keir Starmer gets the backing of his cabinet as rivals bide their time.
Bloomberg learns the EU is preparing a path to give Ukraine gradual membership.
Plus, why the city once known as Europe's oil capital may be seeing a terminal decline.
Let's start with a roundup of our top stories.
The British Prime Minister Keir Starmer appears to have won a reprieve from a potential leadership challenge after all members of his cabinet backed him to stay on. It came after a second top advisor resigned and the leader of the Labour Party in Scotland called on Starmer to go. Across Labour's political spectrum, MPs and ministers posted messages of support on social media. Even potential leadership challengers like former Deputy Prime Minister Angela Rayner and Health Secretary Wes Streeting had backed Starmer.
Let's give Keir that chance. Let him set out how he's going to lead us forward.
Wes Streeting was speaking to a Sky News podcast. His comments came after Labour's leader in Scotland, Anna Sarwar, called on Starmer to step down.
The situation in Downing Street is not good enough. There have been too many mistakes. They promised they were going to be different, but too much has happened.
Sarwar's wing of the party faces a wipeout in Scottish parliamentary elections in May, as does Labour's campaign in Wales. The support gives Starmer more time in the top job, but his record low polling and upcoming local elections are adding to a growing sense of crisis in Downing Street.
Bloomberg has learned that the European Union is preparing options to embed Ukraine's future EU membership into any peace deal with Russia. Formal negotiations on EU membership began in 2024, but the process has been stalled by objections from Hungary. With more, here's our Chief Europe correspondent, Oliver Crook.
Sources say the options now under consideration include providing Ukraine with the protections that come with EU accession up front, as well as immediate access to some membership rights. At the same time, the bloc would give Ukraine a clear time frame, as well as outline the steps it needs to take in order to advance through the formal accession procedure, which normally takes many years and requires the backing of all member states. A draft peace plan anticipates EU membership in 2027, with Kyiv receiving some benefits from membership in the interim. In response to questions from Bloomberg, a spokesman for the European Commission said Ukraine's future accession to the EU is part of the discussion on a peace agreement. Oliver Crook, Bloomberg Radio.
European Central Bank President Christine Lagarde is urging politicians to push for deeper financial integration fast. The central banker told the European Parliament the bloc urgently needs to improve its growth and productivity.
These reforms are not abstract. They are the practical foundations of resilience and sovereignty in a world where economic power is increasingly exercised through finance, technology and trade.
The ECB president is calling for faster progress on financial market integration, cutting regulation and creating a digital version of the euro. Despite a major report on the need for reform from Lagarde's predecessor Mario Draghi in 2024, the EU has so far not made significant progress on implementing his recommendations.
France's central bank governor, François Villeroy-de-Galhau, surprised many yesterday by announcing that he will step down in June this year, more than a year before the end of his term. Villeroy-de-Galhau insists that his decision to leave early is a personal one to allow him to run a charitable foundation for young people. However, the move gifts President Emmanuel Macron the opportunity to appoint the next governor rather than leaving that decision to his successor. Charles-Henri Monchot is CIO at Banque Seize.
I think it's going to be a very normal and usual process in terms of replacements. It's true that his departure was unexpected, but we think that the ECB will remain, let's say, as independent as it has been the case in the past. I think we know that in their case, the mandate is more simple than in the US. It's first and foremost about inflation.
Charles-Henri Monchot speaking there, as polling suggests that the far-right National Rally could be in a strong position to win next year's French presidential election.
Shares in US insurance brokers were pummeled in trading yesterday after the launch of an AI tool from insurance shopping platform Insurify. The tool uses ChatGPT to compare car insurance rates. The S&P 500 insurance index closed down 3.9%, its biggest drop since October, with Arthur J. Gallagher, Aon and Marcia McLennan down significantly. The UK's insurance industry is increasingly seen as a bedrock of the City of London, while France and Germany also have sizable insurance sectors. But there are those who doubt it can replace the core business of insurance brokers.
In a new analysis of living standards, the think tank, the Resolution Foundation, says a typical lower-income British household would have to wait 137 years to see its living standards double. Bloomberg's Ewan Potts has more.
High rents and low pay mean work is no longer a route out of poverty for millions of families in the UK. That's the conclusion of a report called Unsung Britain from the Resolution Foundation. It says incomes for poorer families are set to grow just 0.5% a year across the 2020s. In the 40 years up to the mid-2000s, the typical disposable incomes of working-age families in the poorest half of Britain doubled, growing by 1.8% a year in real terms. The report says that for many, in-work poverty has become a bigger issue than worklessness. In London, I'm Ewan Potts, Bloomberg Radio.
And those are our top stories for you this morning. Now, in terms of the market, stocks are at or around record highs. The MSCI All Country World Index up 0.2, MSCI Asia Pacific Index up 1.3% to an all-time high. The Nikkei 225 also an all-time high. European stock futures, though, are actually in the red. Nasdaq futures are also lower this morning. The yuan has surged. The Bloomberg Dollar Spot Index slightly weaker dollar this morning. President Trump saying that his Fed pick, Kevin Warsh, can get the US economy growing at 15% or more versus 2.4% currently. Also results from Kering out this morning. So comparable revenue down 10%, not quite as much or as bad as had been expected. So that when it comes to earnings and the markets this morning.
In a moment, more on the reprieve for Keir Starmer, at least for now. Plus, is the UK's North Sea oil and gas industry in terminal decline? But another story that we've been reading this morning, the man who became famous for his work on touchscreens has gone back to buttons. This is former Apple designer Johnny Ive, who's unveiled his design for Ferrari's Luce model, which, Mark Gurman writes, rejects the prevailing tech industry vision of autonomy and screen-dominated interiors. Instead, it's got plenty of switches and physical controls, putting the emphasis on the active driving itself. Now, there are some Johnny Ive hallmarks in there, some aluminium components and leather work as well. But interestingly, Johnny Ive actually told Mark that electric cars don't need to have a digital interface.
Yeah.
It doesn't have to be all big screens and touch screens, and actually there's value in having buttons to press, which I think is a bit of a relief.
It is. It's very on brand, isn't it, for Ferrari, the whole driving experience. I mean, remember, this is an EV vehicle. Is it going to have the roar? There's been a huge debate about that in the, for car heads. But I just like this, that to me it's about sensory design. Are we returning to the idea, that William Morris frankly pioneered, about having in your houses nothing that is not useful or that you believe to be beautiful? I think it's really nice. And of course, Johnny Ive would surely be aware of the arts and crafts movement in the UK. So yeah, touch buttons and knobs and things, I think is amazing.
Okay, you can read that full story on Bloomberg.com. We'll put a link to it in our podcast show notes. Let's bring you up to date, though, on the political turmoil in the UK. The Prime Minister appears to be safe in his job for now after his ministers came out to support him following criticism of his appointment of Peter Mandelson as ambassador to the US. Our UK politics reporter James Woolcock is with us now for more. James, why did the Cabinet choose to come out in support of Keir Starmer?
I think to understand this, you've got to separate it into what's public and what's private, Stephen. So publicly, we know there was a very, very, very good operation by Downing Street where in the kind of fallout from the Scottish leader Anna Thawa calling for Keir Starmer to go, which again, to underline it, is the most senior person in Labour yet, and a country leader of the party calling on the Prime Minister to go, you had within the hour or two that followed every single cabinet minister bar none being rung up by Downing Street and saying, will you back the Prime Minister? If so, will you put that on social media now? And they all did. So publicly, it was a good operation. Then in the PLP meeting later, the meeting with sort of the rank and file MPs that Bloomberg spoke to on the record were unanimously effusive, saying it was the best speech they'd ever seen Starmer give, saying he came out fighting. Now to the private stuff. Off record, so I cannot name these sources, one MP told Bloomberg that none of Starmer's potential challengers is ready to launch a bid to replace him, so they had little choice but to declare loyalty when asked, with another one saying that they had bottled it. And so you can build a picture here of a party that is deeply unhappy but is not ready to contemplate regicide.
Yes, interesting. Does this mean that a challenge is off the table for now? Where do we go from here?
I think there are three things we learned. Point one, as I've kind of already covered, no one wants to be the person wielding the knife here. There is a silent majority currently in the Labour Parliament for keeping Starmer in place. Point two, and this is something I think we might have missed, regional parts of the party, Scotland, Wales, was in Manchester, Birmingham, Yorkshire, are furious. And they are facing losses in May that are going to hit them far worse than anyone in Westminster. They might be the spark that does this. And point three, Starmer is weak and badly damaged and has had an unusually public display of anger, has lost two of his top aides. After we were on air yesterday, the director of comms, Tim Allen, also quit Caroline. And there are reports from the Guardian and Times this morning that the Cabinet Secretary, the most senior civil servant, Chris Wormald, may also be on his way out.
James, all of this is happening at a time when the UK economy is actually starting to show signs of improvement.
I mean, step back for a moment from all the political misery and smell the economic roses. Businesses most optimistic in 17 months. House prices bouncing back all-time highs. The Bank of England cutting base rates, expecting inflation to return to its 2% target in spring. And there is even talk, dare I say it, of a revival in productivity. So to quote Callum Pickering from Peel Hunt, the chief economist, if Starmer can just hang on a few months, the narrative can turn in his favour. All I will say to round this off is, there's another target. If Starmer survives just 37 more days, he will have had a longer tenure than Rishi Sunak.
Very interesting, yeah. OK, James, thank you so much for being with us. Our UK politics reporter, James Woolcock. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, North Sea oil and gas was once a significant source of revenue for the UK. Today, it's in terminal decline and a political fight is ongoing in Westminster over whether the industry is worth saving. Our energy reporter Olga Tanas joins us now for more on this. Olga, the UK has been retreating from oil and gas as part of the energy transition. What state is the industry in now?
Well, oil and gas production started about 50 years ago in the British North Sea, so you can imagine it's now a very mature basin, which is 90% depleted for commercial resources, according to Wood Mackenzie. So oil and gas output has fallen to less than a quarter of its peak in the aging North Sea, while jobs supported by the industry, by oil and gas, they more than halved. And in addition to declining output, the industry is also suffering from high taxes, in particular windfall tax, which was introduced by the Conservative government after Russia's invasion of Ukraine sent energy prices soaring. So although prices have since retreated, the windfall tax was extended and increased several times until 2030. And that has chilled investment in the industry, with some producers deciding either to merge or to sell their assets in the British North Sea.
So then what's the government's plan for the North Sea? What is the industry view of it then, if you say some are leaving already?
Yeah, so the Labour Party made it clear that there will be no new exploration licenses as part of the energy transition. But at the same time, the government acknowledged that fossil fuels will remain for decades to come, in particular because about 120,000 direct and indirect jobs are supported by oil and gas. So last year, the government released the North Sea Future Plan that will help to protect existing North Sea jobs while the energy transition is happening, and at the same time will help workers to move into clean energy industries. So the government believes its clean energy push would create more than 400,000 jobs by the end of this decade. And separately, it set aside a £20 million fund to help North Sea workers to retrain and to move into renewables.
So does this mean that the oil and gas industry is gone and on the way out, or can it be revived?
Well, what we need to understand that the decline of the industry is inevitable amid falling production in the aging basin, and everyone understands that. But the question is how fast that decline will be. The industry believes that right policies, including replacing the windfall tax and allowing more drilling, more exploration, can boost investment, save jobs, help to cover about half of the UK's demand by 2050, and create more taxes for the nation's budget. But activists disagree, and they say that the ship has sailed with UK's growing dependence on imports, and the nation should be ramping up renewables.
Yeah, quite tough then for Aberdeen.
Oh, well, that's true. The city actually had one of the UK highest concentration of millionaires, but today Aberdeen's job market is among the weakest in the UK. And you can see empty storefronts on Aberdeen's Union Street. It's a main shopping district in the city. It was interesting. One of the people we talked to was Paul Delio, who moved in Aberdeen more than 3 decades ago, and now he's a professor heading Robert Gordon University's Energy Transition Institute in the city. And he said, Aberdeen has navigated the industry's inevitable fall for years. But lately, he said, so it moved from a managed decline to a much more accelerated one, and the impact is unavoidable.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.